For business, perhaps the most significant new item in the budget was a $3 billion package to address the nation's skills shortage and deliver trained workers to where they're needed. In fact, the tightness of the labour market was again highlighted this week, with unemployment holding below 5%, despite a small drop in full-time jobs in April. The biggest player in the labour hire game in Australia is the Melbourne-based Skill Group, which services some of the sectors most starved of workers, such as resources, construction and infrastructure. I spoke to Skill Group Chief Mick McMahon about what needs to be done and whether the budget has got things right. Well, Mick McMahon, the employment numbers showed a decline in April that were out this week. Are you seeing that reflected in your business? Are you seeing an easing up of demand for labour?
No, we're not seeing that at all. In fact, probably in the last month or so, we've seen a little stronger figures down the east coast of Australia, which have been a little softer than we might have liked, with the effect of the rain and the wet weather on parts of our business, and I think the high dollar on some of our manufacturing clients. But in general, we'd say the employment rate or the demand for our services is continuing.
And particularly in WA and Queensland?
WA and Queensland have been strong and continue to be strong. We were a little worried about the effect of the Queensland floods, and I think continues to be a slight negative. And also the wet weather on some of our mining clients also affects demand. If it's too wet to work, our guys go home and we don't get paid, whereas of course their own employees do. So that wet weather and the floods has had an effect.
Tell us a bit about how it goes manufacturing versus resources, and also East Coast versus West Coast. You mentioned that it's quite soft in the East Coast and manufacturing. How long has that been going on, and what's the outlook look like?
Yeah, so it's a relative statement. We're growing right across the country.
So you're getting more jobs in manufacturing, just not growing as rapidly?
At the same rate as we are elsewhere in the country. So over 40% of our business comes out of Western Australia, and demand is strong. Nearly half of our business is in mining, resources and oil and gas, where again demand is strong. But we also see strong demand in some areas for infrastructure build, roads, rails and the like, and increasingly demand building up in the telecom sector, particularly if the NBN work starts to flow.
And what about supply? Are you finding it easy to get enough people?
It's not easy. We do say we don't see a labour shortage in Australia, but we do see a skills shortage, particularly in some skills and some geographies.
So tell us about the distinction between the two. If there's no labour shortage, you mean there's plenty of people who are unskilled, is that what you're saying?
Well, I think for low-skilled work, we can relatively easily find people to perform that work. If it's electricians, diesel fitters, mechanics, high-end welders, that gets a bit harder, particularly in some remote geographies.
Well, looking at all the projects that are on the book, all the construction, energy and mining construction that is in the pipeline, how do you feel about their ability to actually get enough people to build those things?
Well, I said at an investor conference last week that I don't see a capital shortage will limit a lot of that activity, but I do think there'll be potentially a labour shortage. But again, it'll be a shortage of key skills in key locations. So we have a backlog in some areas for high-end technical skills and white-collar professionals, geologists, engineers and the like, and it does take a little while to fill some of those roles. And if we look forward, I would expect that could build up.
This week's budget was designed to do something about that, allocating another $359 million to the National Workforce Development Fund, making it a total of $559 million. Is that going to be enough?
Well, directionally, we very much like what the budget's done for skills and for training. We think it will help, and even for some of the immigration initiatives into remote areas. We think they will all help. The challenge really is to get some traction quickly as a result of those initiatives, because it will take time for that to flow through, both to get action on the ground now and then to have more trained people coming through over the next year, 2 years, 3 years.
Do you think what's in the budget is enough? You said it's directionally it's okay, but is it enough?
I think in the end we'll find that we have to do more, but we definitely think it's moving in the right direction.
And what about the 16,000 extra immigration places for skilled migration? Do you think that's enough?
Well, again, in the long run, the right answer is to train more Australians to do these jobs. There's no doubt, though, that this will help, particularly if they're targeted at the high-end, very scarce skills, which may be a bottleneck to a project, to a timeline. So it may be a project engineer, it may be a geologist, it may be those sorts of skills which we're struggling to find, and particularly targeted at the remote locations, I think is also helpful. So whatever helps our clients helps us. I think that will help our clients. But in the end, 16,000 jobs when you need maybe 500,000 jobs over the next few years, it's not the main game.
Is that how many jobs you think are needed? 500,000 jobs?
We believe so.
It's hard to imagine where they're going to come from.
Indeed. Well, and back to this point and why we support the direction of the budget, which is, can we move more people from unemployment into employment, and can we move more people up the skill curve from lower skilled jobs to higher skilled jobs?
Now, in the middle of all this boom and resources boom and switch to some extent to outsourcing, skills itself got into trouble a few years ago and saw a big decline in profit and so on. What happened there?
Well, I've been here around 6 months as part of the change we've renewed a lot of the board. We have a new CEO, we have a new strategy. We've recapitalised the balance sheet, which has moved us on from those days. But in general, Alan, like a lot of businesses, Skilled expanded through acquisition just in time for the GFC. And then in the subsequent downturn, things got a little tight from a balance sheet and performance perspective. It is nonetheless exposed to these themes that we've been talking about in terms of growth in resources and oil and gas. It's exposed to the skills shortage in a positive way. And more importantly, it is a turnaround opportunity. And most of what we need to do with this business is within our control over the next few years.
Well, you've had an equity raising and raised a bit more than 70 million. Are you satisfied now that you have the balance sheet and the management team to take advantage of what's happening?
We've definitely got the balance sheet, and as we adopt the strategy that we've taken to market over the last 6 months, we'll